How's it going, everybody? Can you hear me? Just checking, doing a sound check. Just let me know in the comments if you hear me loud and clear. Okay, perfect. Let's get into it. Alright, so as you guys know, I like to have a very data-based approach when it comes to trading, if I can. And I'm just going to go through like a general thought process in terms of how I go about it. And I'm going to show you a pattern at the end once I've shown you all the sort of different data points combined, so that you can kind of see how it all came together. So the first thing that I want to bring to your attention is the behavior of fish. So if you've just signed into my live stream for the first time, then these two indicators up here are cumulative volume deltas. So basically what it does is it tracks the market buys and market sells of market participants, and this one in red is for whales, so order sizes over $100,000, and it's also in spot. Now generally we would consider spot whales to be smart money, and generally speaking, if we can see this sloping up in an accumulative manner, then that could be bullish for the price. The bottom one is CVD for fish. So these are order sizes under $10,000, and it's on perpetuals. So this is what I would normally look at for liquidity. As you can see, as this was rising up, perp fish, who are typically wrong most of the time, were heavily going long here, and then what happened? The price subsequently crashed. And then on the third panel down here, we've got our open interest. Now what we can see is very unusual behavior in the open interest. Is the open interest is now rocketing, and open interest, all it is representative of the total number of contracts open and closed. We do not know the size, and we don't know if it's longs or shorts, except do we? Now the behavior of the fish is showing that they're actually shorting this quite aggressively. So this is sloping down and open interest is rising. So I'm under the assumption that as we're down here in this range, now we can be down here for quite some time. We're accumulating shorts from fish. So that's the first thing that caught my attention down here. So basically, we had this area here, which could be somewhat of an accumulative range, and then we have our manipulated move down here, and it could dip down slightly lower, down to this large bid here at 21,500. There's still a resting bid here waiting to be filled, so that could still get hit whilst enticing more bears, and then we could potentially have an expansion up to the upside. But let's have a look at more data to see if there's anything else that confirms this type of analysis. So the second thing that I want to look at is the order book. So if we go to the market depth, we can actually see that the market depth across, this is global bid to ask ratio, is quite elevated here. And the last time we came up towards the 20% mark was down here. Although it did go sideways for quite some time, before it had an expansive move up, and I expect this to be no different. I expect us to go sideways for a number of days, maybe even to the weekend, and then we could go up before the CPI print, and then we'll see what happens after that. On the liquidation side, if we just bring the granularity up a little bit, then we can see more or less where the more attractive areas are. We can see we've got these massive liquidation pools that have recently come up. These three here, that is in line with our expansion idea. So, there is obviously a lot of liquidity to the upside, and we also still have a little bit down here that could still be taken out, so at 21,447. So we could go for a final dip down in this area here, and then we'll go on the expansion afterwards. It's difficult to say when the expansion will happen. So ideally, you want to be, if you get entering long, you want to be in this lower region area. I'm sure we will come back down and tap these lows a few times before going up. So yeah, that's looking good. We're starting to get some delta divergence, which is also good, and we can also see that the order book is pretty bid up. Okay, so I'm going to go into my chart now, and now that I've given you some context, we've got fish shorting, open interest rising, an increase in demand in the book, potential manipulative move to the downside here. We've got resting bids here waiting to be filled, and then potentially a lot of liquidity to the upside on the expansive move, maybe in a few days. So let's go to the chart. So I've got this chart here. Now we are making a picture perfect head and shoulders here. So right here would be the neckline, and we are still making higher low patterns, although even if we come down to this level here at 21,393, we would still technically be in this head and shoulders pattern almost perfectly. Now, our liquidation levels that I had previously mentioned before are up here at around 22,500 up to 22,700, which is also in line with this point of control here and this massive fair value gap that has been yet to fill. Now, a fair value gap is an inefficiency in the market when we have a sudden move down, and this inefficiency most of the time will get repaired. Some people call it unfinished auction, some people call it fair value gap, whatever. We also have had a completion of this bear flag, and we are now at the end of that, which is also interesting. And we have all of these highs to be taken out here, so we could have some kind of movement like this down to the lows, up, consolidate, and then expansive move up, fill this fair value gap up until the point of control, which is here, and then that could be the right shoulder, which would mean that we're in for a pretty big move to the downside. And the head and shoulders target is down here at 19,800. So depending on how you trade, you want to have a kind of a scalper's mentality. You want to get in and get out, because if this goes down, then your altcoins are going to shit the bed, and it's going to be pretty messy. But perhaps that's what we need. We need a bit of a flush of open interest in general, because we can see that, generally speaking, our open interest is very, very high. And I've marked out here that's bugging out a bit. But anyway, open interest is quite high, and demand also is waning on the higher time frames. So we can see in the order book that the demand on the bid side is declining. So whilst we can have an expansive move up, it will probably be a weak expansive move up. So that's why I believe that this could be a right shoulder, much lower than the left shoulder, which is typical of a head and shoulders pattern, just to take out these highs, hit this point of control, meet a lot of resistance there, head back down, and then we'll be looking at this point of control down here, and this fair value gap, which by the way is also a CME gap. So we have a CME gap down here. So yeah, that seems like a pretty worthy target. Yeah, that's basically it. That's my analysis. I think slight expansive move up could be a good scalp trade. Then I'll be looking for shorts potentially around this area to short down to this area here, and then we'll see what happens. Does that make sense to you guys in from a sort of data perspective? Or does anyone have any questions? Up only 100x. Yeah, so I mean, this is quite an interesting example of how you can sort of piece the data together to create an actionable plan. Obviously, if and when we do get up to here, up into the right shoulder, we would want to analyze the data again and see if the data is in confluence with a head and shoulders. The rules for a head and shoulders to be valid. I mean, this is quite a symmetrical looking head and shoulders. Maybe if we check the Fibonacci's, we can see some confluence of that point of control. .382 potentially. Yeah, we would want to see, yeah, exactly. So if we were to get up to here, basically what we want to see is a flush of this open interest. That's the first thing we want to see, and then we want to see the fish starting to buy again. So this would start coming back up, showing that the FOMO is back. And we'll probably also see distribution on spot, so we'll continue to see this going down, and that would be pretty telling. Not only that, but maybe we would see the bid to ask ratio turn negative again, and this would be quite telling on the right shoulder. If this was to go red again, then we've got ourselves a right shoulder. There's no questions about it. It would be a really easy short for me. Yeah, so obviously if like we can see here, right, there's a lot of shorting happening down at these lows, and it's creating a liquidity incentive to the upside. So currently our delta is showing that negative 3.1 billion, which is quite high. And we have these huge liquidity pools to the upside going all the way up to 22,500. Like if you wanted to play it safe, you just aim for this area here if you're looking to scalp this long. And you know, maybe it you know, you just take profit here, and then you'd start looking for shorts around the 23 mark, something like that. But as you can see, like there's obviously the biggest liquidity pool when looking at the liquidity profile is here. So we've got over 200 million on this little bar here, or big bar I should say, which is where the sort of the magnet effect is probably, you know, is where it's going to draw the price to, especially if we start getting some momentum. Then we can head up there pretty fast. We could also see here is that we've this is another look on the liquidity pools. We've taken these ones out. We've got this one, this one, this one, and potentially this one. Now, if we take out this one up here, then that would also fill that fair value gap, or that inefficiency that I was talking about. So let me show you an interesting indicator. I'm actually going to turn off the candles here, and we're going to put on our true gaps. So this shows us the gaps across all the different exchanges, and we can see we have this massive gap from here to here. Now what happened when we came down here is we actually used the true gap, or the fair value gap, as resistance. So the market makers weren't ready to fill this gap because they wanted to leave it to be filled later on. So we came down further, but it doesn't mean that this won't still get filled. It gets filled most of the time. There's a very high probability that this gap will get filled, and it's almost algorithmic. I rarely see them not filled unless it's some kind of breakaway gap. So there's a high probability chance to me that we will come up, fill this gap somewhat, and then, you know, the liquidity incentive is no longer really there to continue to the upside, and we'll start drifting back down lower again for that right shoulder. We are seeing some slight bullish divergence on the hourly, although take it with a pinch of salt. Hourly bullish divergence isn't much to go by. Also seeing pretty oversold on the 4 hour as well. So lining up with this potentially being the neckline and quite possibly a move to the upside there. We have a pretty big downside target for the head and shoulders break, so we'd be looking at down here. Obviously we've got some gaps down here. You know, I wouldn't want to be in any longs when we get up here. We want to be fully committed to a short, and this could be a beautiful short actually. It could be a very nice one. Yeah, exactly. Yeah, we've cleared out a lot of that long pool liquidity, and if we look at other coins as well, let's I don't know, let's throw up some random shit coin like Ren. we can also see that we're just like we giga nuked on altcoins. We've seen 40% corrections and things like that in the last 24 hours. Or last 48 hours, I should say. So, we definitely should see some relief on altcoins as well. We don't generally go down just in a straight line. We could have a kind of an A, B, C, with this being an A and then a B wave up and then a final C wave down type thing. Something along those lines. But yeah, we're going to get a lot of people shorting down at the bottom here, expecting lower, and they might be right in the long term, but we're going to put a bit of doubt into them first before they can be right, and with all the fish going short here, with all the fish going short here, I don't think they're going to be right. They're never right. They're always wrong, unfortunately. It's the sad thing, but it's the way the cookie crumbles. So what would be the confirmation of this being a manipulative move? Well, if we got back into this range, that would be a clear confirmation. I don't typically like to trade that way. I don't like to wait for late signals. I much rather get in long down at the lows and just have a tight stop loss. My stop loss for the long would obviously be at this low here, at 21,000. Let's say 21,250, something like that. So, pretty good RR. You could measure it up here. I don't know why I can't find it. Oh, there it is. You're potentially risking 1% for 6%. Let's say I'm a bit more conservative and I just go for that. Still a good RR. And then we could then do the opposite and short the point of control. I think a little bit of a wider stop, and we're actually then now aiming for this lower area here. So that would be the sort of thing that I would be looking for now, in terms of the next two trades. Which obviously requires a great deal of patience. These are more like, these trades could take 2 to 3, maybe 4 days to play out. So yeah, it takes a bit of patience to get into these. Well, I hope that was somewhat useful and made some logical sense in terms of combining the data with chart patterns and things like that. That's generally how I like to trade. I like to try and piece everything together. I'm usually a better trader on Bitcoin than I am on altcoins. Altcoins are always a little bit more volatile and a little bit more difficult to determine. But as a sort of rule of thumb, when Bitcoin is looking bullish, you can start looking for altcoins, and usually those those plans will work out better. And when Bitcoin is bearish and the demand is weak, even now to some extent, altcoins are just not worth really getting into. I think if we were to bounce up to here, then I would definitely be looking at some altcoins to short, especially if the demand started dropping off, because just as altcoins were an amazing long down here, they're going to be an amazing short up here as well. Okay, I hope that was helpful, and I will just wait to see if there are any more questions before signing out. Your UST margin account for what? I recommend that you use a platform called Finaday, and no, I don't have a, oh, okay, you're joking. I don't have a reference link anyway, because Finaday doesn't do that, but it's a very, very good platform for having sort of semi-automated trading, because you can have your stop loss automatically set for you and your take profit before you make the trade, and then you should just walk away. Okay, cool. Thank you guys. If you like this stream, then give me a like or a retweet, a retweet on some of my tweets, as I'm trying to grow my account at the moment. That would be highly appreciated. See you.